Right, let's get some business news for you now. Kate Moody is with us in the studio. Good to see you, Kate.
Hi, Laura.
And in response to a strong US economy, the Federal Reserve has raised interest rates once again.
That's right, for the third time this year, only the eighth time in the past decade. As expected, the key federal fund rate being lifted 0.25 percentage point to between 2 and 2.25%. The bank raising the specter of one more rate hike this year and 3 more next year if everything in the economy stays on track. America's central bank pointed to strong economic expansion, wage growth, and low unemployment, and it raised its forecast for GDP growth for this year and next, expecting it to plateau off about the year 2021. Now, for some insight, let's cross to the US and speak to Frank Warnock, professor of business administration at the University of Virginia's Darden School of Business. Thanks for being with us on France 24. Now, this rate hike itself was widely expected. Is there anything in the wording of the Fed statement or Jerome Powell's comments that has surprised you?
No, Kate. So as you said, it was widely expected, and given that he just gave a speech at Jackson Hole a few weeks ago, I think he used that to telegraph his thinking about the economy, and everything seems to be quite strong. I think he is cognizant that there are some risks in the economy on the fiscal side, on the trade side, but overall, the economy is in a very nice spot.
Now, American businesses have been expressing their concerns about the trade tensions and back and forth tariffs, especially those between the U.S. and China. How did you hear those worries being reflected in what the Fed said this evening?
Well, Powell has continued to say not a whole lot on this topic, right? So mainly he leads with, look, this is not part of our job description, right? We have a mandate. Trade has nothing to do with our mandate, except to the extent that it affects GDP growth and inflation. And so what he has continued to say is we're on the lookout for problems from trade wars, but we don't see it yet in the data. And I'm sure he has a whole team behind the scenes looking at this every single day, but the public proclamations on this topic just suggest that, yes, they're looking at it, but they don't see any evidence of problems yet.
Remind our viewers, if you would, why all of this matters. How do the central bank's decisions affect consumers?
Well, so for example, they did raise short-term interest rates today by 25 basis points, 0.25 percentage point. That will feed through into credit card rates and other borrowing rates throughout the economy. At the margin, we might opt not to borrow as much, right? I mean, this is exactly how the Fed expects its decisions to trickle through the economy. So you should see increased borrowing costs going forward, especially interest rates that are tied to short-term to the Fed's policy rate.
Now, the Fed has also dropped the word accommodative from its latest policy, and there's talk about this idea of a neutral or a normal rate. From your point of view, what does that look like, and what comes next for the Fed?
I think so. If you look back to Powell's Jackson Hole speech, I think it was very informative what he said about the stars, right? So there's a bunch of stars in economic theory and policy, and one of it is R star, which is the neutral rate, neutral short-term rate. An important thing that Powell mentioned is these stars, while important, are unobservable. So we don't know exactly where they are, and so he has a guess. Others will have on the committee will have a guess what the appropriate rate is, but we don't actually know. The one thing I look at is the real Fed funds rate, so just the inflation-adjusted Fed funds rate. It is now running at about 0. That is still very accommodative. They can take the word accommodative out if they'd like, but a 0% real Fed funds rate is definitely accommodative. Once we get up towards 1%, we're starting to approach normality, and so that would be if inflation stays at around 2%, a 1% real Fed funds rate would mean the Fed's funds rate would be at 3%. So 3% would start to look a little bit more normal if you're just looking at the historical average for the real Fed funds rate.
All right, Frank Warnock, thank you so much for joining us here on France 24 from the University of Virginia. Let's check in on the day's trading action now. Investors, of course, had been waiting to hear from the Fed. Wall Street had already been trending up before the announcement, and since there were no real surprises there, we're seeing that trend continuing there, although stocks have pared back slightly this hour, the Nasdaq leading up about 1/3 of 1 percentage point there. The major European indices closed upwards earlier on. The CAC 40 here in Paris outperformed. It was boosted by shares of Bouygues and Airbus. Germany has begun operating the world's first commuter train powered by hydrogen. The zero-emissions engines are more expensive to build, but cheaper to operate than traditional diesel trains, with the added benefit of being green. Owen Barnell reports.
This is the Coradia Island. In other words, a world first, a commuter train running on hydrogen power. The idea of using hydrogen as a fuel source is decades old. Now, French company Alstom has helped design the first 2 prototype trains to use it, up and running on railway lines in northern Germany.
The Coradia Island is the first train that can travel fully emissions-free on tracks that don't have an overhead electric line. It is really an electric train, but this train doesn't get its energy from the overhead line, but from a fuel cell's engine.
Hydrogen is combined with oxygen to power the fuel cells that drive the prototype, instead of burning diesel. Alstom claim their emissions-free train is environmentally friendly, but is it really up to scratch?
Of course, a hydrogen train is only as clean as the hydrogen that it uses in its fuel cells. Then you have to look at how it was made.
Hydrogen can be produced from burning fossil fuels, or from renewable energy sources, like solar and wind. Only then is the technology green. Yet there are other perks to using hydrogen.
Filling up is as easy as filling up with diesel. The vehicle is connected to the pump. Loading will start and end 15 minutes later.
Fast fueling, and like their diesel counterparts, they have a top speed of about 140 kilometers per hour.
So that could be the train of the future. Germany's planning to build some more, and France also interested.
They're excited about that in Germany, aren't they? You can tell.
They
All right,
are.
Kate, we're going to leave it there. Thank you very much indeed. Kate Moody there. We're taking a